Welcome back to the Dividend Diplomats YouTube channel. You got your boys, Sir Lanny and Bert, the Dividend Diplomats. Whew. Today, we're going to talk about a stock that is getting beaten down. This stock is getting absolutely pummeled, Lanny, after its earnings release. It's getting pummeled so much my screen is shaking right now. The question is, if you buy this stock, are you buying value or are you catching a falling knife, Lanny? We're going to talk about that in today's video right here, right now.
Smash that subscribe button, guys. Let's roar along. We've crossed 19,000. We crossed 19,100. We're about to cross 19 too. Make some noise here for your boys here at the Dividend Diplomats, guys. But yeah, a massive company, Bert, here we're talking about today. Hate to, we've had a lot of positive news. We'll have more positive news, but today is not as positive as one would like. This stock's down double digits this year, and it is almost 150 billion by market cap. They earn over 50 billion. They produce 50 billion in revenue. A big company here, guys.
Yeah, and it's in the midst of a turnaround, which we'll talk about here in a little bit. And after seeing a lot of these dividend cuts we've been receiving, a lot of these stocks that we took a chance on and didn't necessarily work out. Yeah, we're talking about you, Walgreens. We're talking about you, Leggett and Platt. One thing I'm trying to be a little bit more skeptical on is when a company is falling, when a company is sliding, when it gets beaten down after earnings, is that necessarily the time to buy? Do you really believe in the turnaround story? And that's what's bringing us to this exact video and this topic here today.
Yeah, guys, it's all about taking this stock, looking behind the curtain, looking under the hood, seeing if the engine is still intact, or do they need to replace the whole thing, or is there further problems in the future for this dividend growth stock? And when we mean growth, we mean a stock that has double-digit dividend growth as well historically. But Bert, let's reveal the stock.
Do it. Just do
Do,
it.
do,
Do
do,
it. Yeah,
do.
we're talking about Nike, ticker symbol NKE, the polarizing apparel stock that really seems to bring out the emotions out of people, Laney. Because when we put out a post or an X or a tweet, whatever the heck you want to call it these days, people have a lot of reactions about Nike. I don't know if you've noticed that.
Nike, Nike.
Yeah.
Yeah, I mean, I think maybe with some of their labor practices that they're possibly known for, strings or plucks a string here from everybody.
Yeah.
But Bert,
There.
over 50 billion in revenue right now.
Yeah. Up 1% compared to last year for the full year. Their fourth quarter revenue was 12.6 billion, down 2% from the same period last year. Those were your top line numbers. Earnings were released after hours today, the day we're recording this on 6/27. Some of the other results here, gross margin, you saw a slight increase, up 110 basis points. Inventories were down, so they were moving some more stuff out of the inventories, which was a huge issue for Nike when we talked about them in 2023. And at the bottom line of that income statement, net income was 1.5 billion, up 45%, and diluted earnings per share were 99 cents. So, okay results here for
Okay results. Obviously, the stock is plunging after hours here into the low 82s based on what they're thinking is going to happen going forward,
Nike.
guys. Their innovation slowing down right now. Their pipeline, is getting a little meager right now, but maybe with the upcoming Olympics, um, you know,
That also,
basketball season, football season, obviously a lot of big time sports, big time athletes coming through. Bronny getting drafted to the Lakers.
yeah.
Maybe you got the Bronny special coming up here.
Love it. And the thing is, that's really what it's you have a lot of that coming in, but management's already lowering expectations. They're lowering that bar. They're getting to the point where I can go over the hurdle. That's how low they're setting it. It's not looking great. They've talked about how revenues are going to be down, how there's softer demand in Asia, how there's softer demand in the United States. And when you look in the last year results where Nike's revenues were basically flat, when they're already forecasting deceleration of growth even further, of course your stock's going to get pummeled in the after hours.
It's all about future growth, future prospects here, guys. I mean, like you said, they're managing it well. Inventory is down, trying to manage that, churn better.
Yeah.
Net income is stabilizing a little bit, it looks like, despite the poor looking guidance, guys. And hey, I think they're all dealing with a different type of consumer mindset as well. Um, I
Yeah.
know that the secondhand market's still probably pretty strong on the special Nike shoes that do come out. Let us know in the comments if you guys dabble in that. But we're also going to take Nike. We're going to run them through our stock screener. These guys, I actually haven't bought a pair of Nikes in a while. It's been
Yeah.
a few years.
Yeah, it hasn't. I haven't bought Nikes either.
My wife, my wife has a pair of Nikes though.
Yeah, we have Asics, and I think we just was 2 times ago, and then we just bought like Brooks running ones. We found a special on those too. And those have actually been really nice for my foot. I've
Yeah,
enjoyed
and
those.
they
Yeah,
know
so
you. They know feet. Let me tell you that. Brooks and Saucony and Asics. Oh
yeah,
yeah.
yeah, we got to take care of our feet in this household. So we're gonna run through our screeners. Has those three metrics: PE ratio, payout ratio, history of increasing dividend, and that bonus metric, the dividend yield. Again, the market hasn't opened post earnings, so we're looking at the after hours prices where they're down over 12%. For this screener, we're going to use the price at 82.50. We're going to use their EPS of 396, which is just a roundabout estimate, using some of their annualized numbers from earnings. Gives you a PE ratio of 20.83.
Wow. So yeah, S&P 500's PE. If I do a quick lookup on that, it should take me a couple seconds, right?
Mhm.
That's about 28 times earnings. So one could argue that it's undervalued compared to the market right now. Nike's always historically had a higher PE, kind of like a Starbucks stock.
Mhm.
Starbucks stock always had a PE of 25 to 30. Nike's always been in that 25, 28 to 30, 32, 35 range. So it's interesting seeing them down to 21 PE. But the payout ratio, how safe is their dividend right now with this poor looking guidance, lower looking guidance? Well, they pay right now $1.48, per share per year, spread over evenly over 4 quarters, 37%. So pretty safe bird.
Yeah, their 5-year dividend growth rate is 11%, and they've increased that dividend here for 11 plus years too. 11. It's a perfect spot here for Nike. Not bad metrics overall, but like we've said for Starbucks and we've said for other companies that have high dividend growth rates and are struggling, not expecting very high dividend growth for Nike in the foreseeable future until they turn things around.
Right. And, because of the stock price drop, uh, they're down 10% this year, down another double digits, so adding on top of that in the after hours. But yeah, their yield is looking like it could open up here again at about 1.79, give or take here in the morning.
Yeah, and their 5-year average yield is 1.01%, so that's pretty solid premium here over their historical average.
We were talking a little bit, Bert. It's Nike, just do it. So what are you thinking here when it comes to Nike?
Look, I don't think this is going to be the end of Nike's fall. Like, I think they still got room to keep going down. It seems like they're in the midst of a turnaround, but I don't know how. I don't know if they've really reached the valley yet. The valley, I should say. And even with this, even in this after hours, their PE is still a little expensive for a company that has such negative sentiment the way they are. That PE of 21, that yield is still below 2%, and you're not expecting much growth in the foreseeable future. At this price, I just don't see how I can invest in Nike, and I think there's room to go. And that's why I asked that question of, are we just going to catch a falling knife if you buy Nike today?
Yeah, yeah. I mean, I think the prices that are right now where they're at, yeah, I would agree. I think, if you see them keep correcting, I think there's still some room to go on Nike. Or is this going to be like a Starbucks situation where Starbucks had a flat drop into the 72 to 75 range, then kind of rebounded
Yeah.
about 5%?
Yeah, and if it hits the low 70s, I think we said is what, 72, 73. That's when their yield pops up to 2%. And that seems like a much better entry point for Nike. So they've still got a lot of room to go, and we'll see if they hit
Yeah.
it.
Let us know what you guys think about Nike. Do you think in the low 80s is their better entry point? Obviously, everybody's going to say, oh, 70s is better. Do you realistically think it's going to get in the 70s? Let us know in the comments. Let us know what price point you see it going that you're willing to grab it. And do you own Nike stock and what are you doing with it? Let us know in the comments, guys.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert the Hurt Man and Lanny from the Dividend Diplomats. Over.